Everybody, Blake Ryder here with Lighthouse Director of Hospitality Research, and with me, as always, is Mr. Daniel Foreman. Daniel, please introduce yourself.
Hey, everybody. I'm Daniel. I'm a commercial strategist here at Lighthouse, also the host of our podcast, and very excited to be here today looking at some fresh new H2 pricing data.
Yes, today we have a treat. These are always some of our more popular Lighthouse Lives. This is the State of Global Hotel Pricing. We are doing a live read-through of our H2 pricing report, and we have a lot to get to today, so we will just get right into it. Here's the table of contents. I won't spend too much time here, but just also note that if you look where I'm pointing, that you'll have a little icon with two pieces of paper. If you click that, you can actually download this and read along with us, or download it for your own reading enjoyment at a later point. So let's dive right into this, the 2024 hospitality story. So our data, three key trends that we're going to obviously dive into in much more detail as we go through this book. But at a high level, regional performance gap. So Latin America was one of the big standout performers in the first half of 2024, and that carried over to the second half. And we'll dive into that versus how other regions had performed in a few pages. This branded advantage number two, we've noticed that there was for the most part, branded outperformed independent, but not everywhere. And we're going to get to that, and we'll discuss why we think that happened in a few pages as well. And then lastly, we have this item about value-driven destinations, with travelers ultimately continuing that sun and sand trend that we saw in the first half of the year as travelers seek value as well as leisure travel. On the next page, we are going to look at our 2025 H1 kind of high-level summary for what we're seeing. Now, this is interesting, Daniel. Now, talk to me here. So the initial data that we have for the first half of 2025, H1, we're seeing for the most part down rates coming down. And now, to be clear, we're comparing actualized pricing from the first half of 24 to advertised pricing for 2025. So I always want to caveat that. But we're seeing a decline in pricing. But what's strange, and Daniel, this is where we need some color here. What's weird is that the forward-looking demand indicators are largely optimistic. They're showing, wage growth and things that would drive demand. So what is with this dichotomy that we're seeing?
Yeah. We're seeing two very kind of different indicators here, right? So we're seeing pricing for H1 2025 is looking a little bit down, peaking forward a little bit deeper into the year this year. And what I think may be going on there is a couple of different things. So I think we do have kind of this geopolitical uncertainty factor that's going on. And also, too, we'll kind of talk through why we're seeing this trend in Asia, because there are a couple of factors that I think are going on there, like some of that diminished outbound Chinese travel that we saw last year, and then even some like weather events, right? So that heat wave in Southeast Asia last year that I think may have kind of diminished that performance last year. So I think a lot of markets are, again, they're very cautious. Cautious optimism is kind of a term that we use in this presentation. So I think a lot of hotels are cautious. They want to build that base occupancy to make sure that they don't have a soft H1 2025.
Totally. And we'll get to this also a little bit later, but India, as it says a little bit down the page, growth leader, expanding traveler base, driving hotel rates upward across the country. And again, more on that shortly. So now we'll shift to the picture from H2 2024. And like we said, Latin America, almost 13% year-over-year growth in the first half of 2024, 13.3% growth in the second half. And the third paragraph, it says it describes it perfectly. It was driven by consumers within the region who experienced increasing disposable income across 2024 and accelerated interest rate reductions versus other regions, along with strong inbound tourism. So those are key fundamentals, like interest rate reductions, things that are going to give people that disposable income to travel. Those are strong fundamentals, and obviously it showed and continued into the second half. But Daniel, Asia and Africa, could you give me kind of a summary about what we're seeing there in the second half?
Yeah, exactly. This kind of ties in with what I was talking about on the last slide, right? Where we have some geopolitical uncertainties going on in places like Africa, and then also too in Asia. Really, the big story there is that diminished Chinese outbound travel that we saw in the second half of 2024. So we are seeing a reversal of that trend, but I really think that's what was going on there in the second half of 2024.
Yeah, we may see Chinese travel cautiously optimistic, like you said, cautious optimism. We might see it return, and we'll get to that again shortly, and some reasons why we think that may be the case. So H2 2024, this is the year-over-year change in hotel pricing performance. Like we saw, Asia and Africa are the big declines that we're seeing in the second half. North America and Oceania, I mean, slightly up, slightly down, but ostensibly flat. And then obviously we have Latin America, like we have been saying, as the big standout. And here, this is just channeling what we saw on the last slide, but in the actual into dollars, where everything's in dollars, just to keep it consistent, and so our charts aren't, all out of skew. But everything's dollars, but and converted. Okay, so we teased this a few slides ago. So this kind of branded versus independent dichotomy that we saw in the second half. So branded hotels, like it says in the middle of the page, were able to outperform independents in every region except North America. And in some regions, the delta between branded and independent was pretty marked. Like it says, Asia branded hotels kept prices the same year over year, but independents were down almost 15%. And then in Latin America, almost a 16 percentage point delta between where your independents were and where your branded hotels were. So, Daniel, what do you think is happening here? Especially, I mean, North America being the one region where it didn't follow this kind of global trend we're seeing.
Yeah, I think that travelers are getting more used to a branded experience, and by and large, I think that's more what travelers are looking for now as they travel into 2025. So you'll see that it's really, really noticeable in Asia, where we're going to see this, I think, either the next slide or the slide after that, where branded hotels are actually able to maintain their pricing year over year for the second half of 2024. But yeah, exactly. Look at that. Where independents, though, they have dropped 14.7%. Yeah. And then you can also see, Latin America, both branded and independent are doing very, very well, but it's really those branded hotels that are taking off. So I think that has a lot to do with, the North American traveler coming from the US or Canada, coming down to Latin America or the Caribbean, and they want that branded hotel experience. I think that's a big part of what's going on here in this data.
Yeah, a bit of familiarity sometimes when you have uncertainty in other economic situations. People sometimes just want to know, what they're getting. We were talking, so let's actually dive in, Daniel. We were talking about this quite a bit in terms of why North America is the one where independents did outperform branded. And you have some really good thoughts on this, on 4-star, 5-star. Can you kind of shine a little bit of light on that?
Yeah. So I think the reason why we saw, North America is kind of bucking the trend a little bit, right? So those hotels in North America that are seeing that pricing growth, they tend to be independents. And then if we dig in a little bit deeper to the star rating, I think this is what tells the story, right? So it's these luxury and ultra luxury independent hotels that are most insulated from price drops. So these are going to be these hotels that have wealthier clientele. They're able to charge higher rates heading into 2025. So yeah, I think this is really what tells the story. And of course, we have Latin America again here. That's across the board. There's really strong demand going on there. But I think I thought that was really one of the most fascinating stories from this pricing report was that 4- and 5-star North American pricing growth amongst independents.
Totally. Let's shift gears actually quickly, and we'll look at short-term rentals. Now, the first paragraph, I think, kind of summarizes what we're seeing, because as it says, H1 2024 defined by broad-based increases in ADR for short-term rentals, but in contrast, second half of 2024 saw noticeably more divergence between regions and some big shifts in direction, reflecting a tougher hospitality market at a global level. So, it's a bit all over the place, as we're going to see, with some markets achieving that growth, some markets not, and there are also some weird data points. Just for example, Oceania, across the board, highest occupancy, which we'll get to in a couple of slides, but actually saw, like it says in the second paragraph, ADR came down, which is interesting. ADR came down in the Middle East, but that made sense because the Middle East had the lowest occupancy across the board for short-term rentals. So what is it, Daniel, and obviously we have Europe, which is going gangbusters. What is it that you think was kind of drove this divergence after such a strong H1?
Yeah, a lot of different things going on. And as we show you this data, just keep in mind kind of this backdrop of supply, right? So we're going to look at some really interesting ADR growth numbers coming from European short-term rentals. And what's fascinating about that is, Europe is far and away the biggest supply market for short-term rentals. They have something like 1.35 million short-term rentals. The next closest region that we'll show you is North America, and they have something like half the number of short-term rentals. So it actually might be good to jump ahead, Blake, and take a look at exactly. Yeah, this slide right here. What's really impressive about this is Europe is leading the way in ADR growth for short-term rentals, and they far and away have the biggest supply. So I think that was really interesting. And this is even with all the talk of over-tourism and enhanced legislation and that sort of thing, and we still have 17.5% ADR growth H1 of 2024 over 2023, and then 18.8% in the second half of 2024. Other regions, when you start to get into Africa and then Oceania, that supply is something like 10% of Europe's supply. So we are looking at a much smaller sample size there. And really, I think you already touched on this, Blake. The only market that's really noticeably down in a big way would be the Middle East. But as we'll see in a couple slides, occupancy for that region is very, very low for short-term rentals.
Yeah, and it's just I think what it comes down to with Europe, especially, it's kind of ingrained in the culture. Like I think a lot of Europeans, to an extent, don't even consider hotels when they're traveling. It's just immediately a short-term rental that they almost default to. So I think obviously that when you have that kind of ingrained in the mentality of the traveler, then you're able to drive rate much more readily. I mean, and then like we said, in stark contrast, Middle East, 28% occupancy in the second half of the year. So you and I were hotel data people. You've been a revenue manager. I think a lot of people watching this either are revenue managers or they're GMs. To drive rate, you need demand. Like that's just 101. So when you have 28% occupancy in the Middle East, you're not going to be able to drive rate as markedly.
Exactly.
This page for the most part is just talking about the demand we're seeing and the growth, and it largely just kind of encapsulates what we were talking about over the last couple of slides. So I'm just going to kind of advance. Here, Daniel, I mean, it puts numbers behind what you were saying in terms of the number of the year-over-year growth. I mean, and you could see, despite Europe already being the largest grouping of supply, we still had 8% in terms of the properties and 9% in terms of that capacity. So growth, but obviously not stopping it. So Daniel, so this is now we'll do H2 advertised, H2 actualized, H1 advertised. Talk to me about the sun and sand stuff. We were definitely dissecting this a bunch.
Yeah, sure. Okay, so these are going to be our top performing hotel markets. And I'll start with that first one, sun and value markets. So you may remember from the H1 pricing report, we were calling these the sun and sand. So there's a lot of continuity from that H1 pricing report. So you may even see your city listed twice or some of those same cities listed twice. But the primary beneficiaries of these trends were places like in Thailand, right? So Khao Lak and Krabi, those two locations are pretty close to each other. So those travelers may have just been putting both of those cities into their itinerary. But then you also have other places like Mexico, right? And in Mexico, look at the different cities there. It's Mexico City, Monterrey, and then also more of like the Caribbean destinations, so Cancun and Tulum. So I think that bodes really well for the entire country of Mexico. And then also Spain and Portugal's Atlantic Islands, so the Azores and Tenerife, which those are typically driven by that UK outbound travel. Yep. Also, too, domestic tourism strength was another trend that we spotted. So key resort destinations that tend to do really well and tend to be driven by that domestic tourism demand. So places like Park City, Utah, Gangwon Province in South Korea, Miami, and then Rimini in Italy we're all in that top 20 performing hotel markets.
Yeah, and also we were talking about how with Mexico, with the exchange rate, the strength of the dollar relative to the strength of the peso. About a year ago, we were talking in the 16 to 17 pesos per dollar, and now it's north of 20. So when you have those types of favorable exchange rates, obviously it makes Mexico a more appealing market to travel for U.S. travelers seeking an international trip. India's momentum, we kind of touched a bit about this earlier in the presentation. Hyderabad, Chennai, Bangalore, all very, very strong performers. We're talking about also the advertised rates in the second paragraph. Jaipur, Hyderabad, Mumbai, all just screaming in terms of rate growth. So it will be interesting to see how, obviously we're looking at, like I mentioned before, advertised pricing. So once we see how it actualizes and maybe it'll go higher or lower, we'll see. But super strong performance in India. And then the other thing that I think a lot of people, especially in the Far East, are going to be interested in knowing. So positive early signs from China. This Chinese outbound tourism, this has been a big talked about subject for quite some time in our industry. And you see Chongqing going from a destination with some of the worst price performance in the second half of 2024 to one of the top performers for advertised pricing in H1, strong indicator. Beyond that, you also have certain markets in Japan, like Sapporo and Osaka, that are, those are major outbound Chinese markets where Chinese travelers who are leaving the country will go to. And we see strong rate performance for their advertised pricing. So that might be an indicator that they feel that the demand will be there this year. So it's going to be very interesting. We're definitely on the sidelines watching and monitoring what we are seeing in this regard. Here is just a summary of the H2 23 versus H2 24 pricing. And you can see a lot of the different markets that we were just referencing. You can see what the actual growth rates were as well. Here, this is now looking forward. Like we mentioned, the Indian strength of price growth, Jaipur, Hyderabad, all very, doing extremely well in terms of your advertised pricing. Daniel, we can't only talk about the good. We got to talk about the underperforming ones also. So why don't we dive into the underperforming markets? Southeast Asia. Daniel, talk to me, please.
Yeah. So this is titled Southeast Asian Markets Adjust, and there's really two major factors going on here as to why some of these markets and some of these cities are considered underperformers. Really, it was two things. Far and away, it was that diminished Chinese outbound that is the real culprit here. And then also, too, like I mentioned, that Southeast Asian heat wave that happened, and that was more so April through June. So it didn't necessarily happen across the entire second half of the year, but I do think that it caused a lot of people to pause before making travel plans to Southeast Asia. So you have those two factors going on, and that's really what caused some of these markets to be our underperformers.
Yep. That spillover from the heat wave definitely had an impact. Number two, Mediterranean reset. That sounds like it should be a thing, right? I'll be back in 10 minutes. I'm going to take a Mediterranean reset.
Yeah, go to a spa, get a Mediterranean.
Should we make this a thing? I think maybe we can get that to catch on. The Mediterranean reset. So we noticed this trend. You had certain markets, Amalfi Coast, Corfu, Menorca. These are markets that were, to an extent, kind of these social media darlings where people wanted to go and get their Instagram selfie and post it. And they did a great job. They drove a lot of tourism there. And, it was strong growth. But, when you have these types of situations in markets, you run the risk to an extent of over tourism. And, all of a sudden what was a place where people wanted to be, now it's crowded and too populous, and people want to then find the next best thing that is a little bit off the beaten path, more emerging markets. So we saw these kind of social media darling markets actually declining a bit. And as people now kind of seek whatever the next best thing. So that is another trend that we also noticed in these markets. And on this page, you can obviously see the year-over-year lowest. So pretty much the opposite of what we saw a couple of slides ago. These are the markets where the pricing came down most notably. And now, somewhat similarly, this is the slide that's going to walk through the year-over-year changes. And again, these are advertised prices compared to actualized prices. So, and it's fine. You just got to think about that in the context of what it is. And we do these every half when we release our H1 and H2 pricing reports. And it was going to be interesting, obviously, to see how these actualize once the rates come to fruition. So, and obviously, we will of course report back with great detail. So, caution meets opportunity. This kind of cautious optimism is the theme that we've kind of been touting, looking forward into the first half of 2025 and beyond. And I think a lot of this is driven by the fact that you have the fundamentals there, but the pricing is not showing that growth. So that's why it's kind of this cautious optimism, because there should be, and it's an environment where pricing should be able to be driven. There are fundamentals, and because at the end of the day, fundamentals are what allow prices to grow strongly. So, just to kind of look at the right side of this page, these are the fundamentals, and these are really wage growth stats that we identified that contribute to these fundamentals. So just for example, US, strong jobs report, 4% increase in wages. That was in December. In EMEA, wages grew 4.8% in 2024, according to the ECB. And in Japan, base wage growth hit its fastest pace in 3 decades. And as it specifies, it was entirely consumed by inflation, but the upward trend is forecast to continue into 2025 to actually lead to that real wage growth above inflation. So those types of fundamentals are what we think is going to ultimately drive this cautious optimism. Daniel, what do you think about the other few?
Yeah, and then just to round out this list here, so the bottom three, WTW estimated that Indian salaries grew 9.5%. So that's the highest on this list. And then not surprisingly, as we saw with the forward-looking 2025 pricing data, a lot of those, the Indian capitals are seeing a lot of really, really elevated pricing right now. So I think that speaks to growing middle class, as well as I think like this burgeoning business travel segment within India. I think that's really what's driving a lot of that pricing growth. And it, again, all ties back to this wage growth in India. And then Canadian wages growing 3.8%, comfortably above inflation, as well as wages in Australia returning to that real growth. So that's growth in excess of inflation as well.
Yeah. I mean, the fundamentals and the wage growth, that's what's going to allow people to, especially leisure travel. When you have that wage growth, that's what's going to drive the leisure traveler to really travel. So here we have the year-over-year change in pricing. Again, H1 2024 to H1 2025. Middle East, North America are the only two markets that we're seeing actual price growth. Again, comparing actualized to advertised for 2025. But again, those fundamentals are there. So it's going to be very interesting to see when we do the H1 walkthrough in a few months what actually transpired and whether or not the prices ultimately rebounded. So forward-looking demand analysis. So this is ultimately the exact opposite of the prices coming down. From an indicator perspective, we are seeing momentum. Like it says, our comprehensive analysis of forward-looking indicators shows positive year-over-year growth in all regions. All regions. I'm actually just going to jump to the next slide really quickly. And you can see there's not a single region where the demand indicators that we're seeing show decline. So it's very strange. Normally you see the price growth in these. So this is a very strange time. Daniel, what do you think? Anything you want to add on this?
Yeah, could you back up to that cool. That one previous slide? And then talking through this a little bit. So again, a lot of this is going to hinge on the Chinese outbound tourism. Yep. So that second point there on the left-hand side, the numbers do suggest an initially weak picture for Asia, but clearly hotels all around the world, and especially in Asia and Southeast Asia, are waiting to see if that tourism returns in 2025. And then also, too, a few other things. We've kind of already touched on this a little bit. Those emerging economies like India will play a key role. And South Asia specifically is expected to lead that global GDP growth. And then right below that, this is another one that I think is very interesting, but in other regions, value-driven travelers are favoring those short haul trips and lesser known destinations. And this is anecdotal, but I know a lot of people that are opting to travel rather than go to Rome and Paris and London and those kind of cities. They're going to more of like the kind of cool secondary cities, right? Like Ljubljana and Bratislava and places like that. So I think that's potentially where we'll see some really good pricing growth in the coming year. And then finally, Central America's pricing performance is slowing down. Now, I know we just talked about Latin America being kind of like the darling of this whole white paper, but I think that potentially could be kind of supply starting to catch up. So there's a really, really big supply pipeline coming into Latin America right now, and most of that is actually branded hotels, which we also kind of touched on earlier. But I think that's potentially what's going down. That's why we see that forward-looking pricing, even coming off a really hot 2024. We still see that pricing even in Latin America, I think was down 7% forward-looking.
Yeah. Yeah, and just one other thing to add on this slide, that top right paragraph on on this page, where we mentioned tourism economics, they're expected Chinese outbound travel to recover to 95% of 2019 levels. I mean, if that happens, we're feeling, the Far East is feeling pretty good. So, whether or not that actually happens, I guess will remains to be seen. And 95% of 2019 levels will be quite a rebound. But nonetheless, I mean, we saw what we see in Osaka, in Sapporo. We're seeing, this rate growth in markets that really rely on that outbound Chinese traveler. So it's all really good stuff. And then here we go. So here are our kind of key takeaways for what we saw, kind of in summation. So market momentum is building. So we have the demand indicators across all regions positive. So honestly, the demand indicators are usually a leading indicator, and then pricing could kind of follow. So we'll see what ultimately happens. And beyond that, those strategic pricing opportunities, like we keep on stating here, we have a foundation, like it says, for rate increases. When you have you can't drive rate when you don't have the demand. So if the demand is there, so there should be opportunities for hoteliers to really drive rate the way they want to as the year kind of progresses. So again, I think the next half pricing report is going to be super interesting, because we'll have a really, really interesting data set to compare it to, and ultimately see how things transpire. And then the last couple.
Cool. And then, yeah. And so let's talk about these last two here. So this consumer confidence returning. So on a wider global level, consumers should be materially better off in 2025, feel more secure, leading to higher spending, but the emphasis will still be on finding value. And then lastly, emerging markets drive growth. So I touched on this one a little bit ago, talking about some of those secondary cities and secondary markets, but also too, middle income and emerging economies will be key to driving demand and pricing. So rising incomes in India, again, where we saw that 9.5% wage growth, which is huge, and a more stable picture in China should lead to a healthier environment within Asia, and India being that leading country for pricing in 2025.
Well, everybody, that was a whole lot of data in about 30 minutes. If you are joining us in the middle if you joined in the middle, where I'm pointing right over here, you'll have a little bit of an icon with two pieces of paper. Click that, and that can take you to download this, so you can kind of go in more detailed. Obviously, Daniel and I wanted to get this in about 30 minutes for you guys. Right now on the screen, you'll see a poll. If you want to be, a demo of the Lighthouse platform and see how we might be able to help you, just click yes and hit vote. Otherwise, you could sign off or hit no and nothing will happen. But if you're interested in learning more, please don't hesitate to do that. As always, it is a pleasure and a privilege to speak to you guys every single month and provide these for you. So we will obviously be back with more great content in the coming months. So please, obviously stay up to date on what we're doing, and we'll obviously be posting what we're doing when we have the links and such. So thank you all for joining. Until next time, my name is Blake Ryder.
I'm Daniel Foreman.
And we'll see you next time on Lighthouse Live.
See you next month.